Welcome back. Again, this is Bill Miranda, and I'm here with my co-host, Jessica.
Hello.
Of the Power Woman Business Center. And listen, Jessica, one of the things I forgot to mention, and this is very important in the first segment, is that the Power Woman Business Center is a non-profit. It's a 501c3. They don't make any money.
Not at all.
Okay? They're here for the betterment of the community. They're here to create jobs. They're here to create businesses that will create jobs.
I'm sorry.
No, please.
The 501c3, we've already been recognized by the IRS to be able to receive donations. So the green light is on for us. And so that's why it's so important for community awareness to know that we exist, that we strictly exist to help out, our economy. And beginning with the Santa Clarita Valley, which is the most important.
Absolutely. And that's one of the reasons why Power Woman Business Center can offer so many things for such good rates. A lot of the things they offer are free, okay? But for such good rates, because there are lots of foundations that are contributing to the Power Woman Business Center to make it possible for the Power Woman Business Center to offer all these services at the rates that they do. But listen, before we took a break, we had an exciting conversation going with Armando Jamjian regarding contract employees versus W-2 employees.
Yes.
Okay. You touched on the importance of that distinction. But now what I want to ask you is, if a company has gone long, without proper documentation, properly classifying their employees as either independent contractors or employees, what are some of the dangers that they face?
Some of the dangers that they face are typically, let's say, an employer, they've had an employee that's been over 10 years, or let's say 10 years or more, or let's say 10 years, they've been as a 1099 employee, independent contractor. What happens is that now, and let's say that employee is now terminated, so they're disgruntled. They go to the Labor Department. The Labor Department does an investigation and says, well, this employee looks like they should have been an actual employee, and you should have paid the payroll for them. Now they're looking at having to pay that going back 10 years, the payroll taxes for them, plus the penalties and interest, and that alone can do a small business in.
So it's really not worth it to take the risk.
No, it's not. And ideally, if you find if you are a business that has been doing that, and you determine that you really should have this employee as an actual employee instead of a 1099 employee, my recommendation is to change that as soon as possible going forward, and so you minimize your risk.
So what are some of the penalties that these companies may face?
Actually, very heavy. You're talking about the payroll taxes plus the penalties. The EDD, where you have the EDD. The payroll penalties can be very heavy. I don't have those offhand, the numbers offhand, but they're very high. We've had some small businesses in the past as clients of our CPA firm where they've gone down because of that small business.
And Jessica, you had another question for Armando.
I do. This is, leading on to something else. We at Power Media Group and Power Woman Business Center, we're part of the Santa Clarita Valley Enterprise Zone. And can you elaborate on what it means to be a part of that and the importance of it?
Sure. Let me start off by giving a little bit about my background with regards to the Enterprise Zone program as well. I am a second-term elected advisor with the California Association of Enterprise Zones, which is the main organization that oversees accredits statewide. We actually the organization work closely with the Housing and Community Development Department and the state senators and assembly members with regards to the Enterprise Zone program. We were actually very instrumental with having, when Santa Clarita decided we had the original zone, which was designated July 1st of 2007, and the city of Santa Clarita wanted to expand into the unincorporated Santa Clarita area, which is, if you're going north on the 5 freeway, to the left of the 5 freeway, which covers Magic Mountain going up to the Industrial Parkway area, and that was part of the new zone that was put out, and we were instrumental in helping get Santa Clarita, have Santa Clarita get that new zone. So now, instead of having 15 years from the July 1st, 07 date, where you have the life of the enterprise zone for Santa Clarita, now we actually we have 15 years from this year forward. So it was a big win. given the state of issues we've had with the governor and some of the assembly members and senators up there that were against the program. Sure, go ahead.
What are some of the benefits from?
Sure. So some of the benefits out there, you have the main benefit. If you're first, you need to determine you're in the enterprise zone, which Santa Clarita has a very large area now. Once you determine you're in the enterprise zone, the benefits are you have employees that are going to meet certain criteria. There's 13 criteria in the Revenue and Taxation Code section. Within that 13 criteria, there's a myriad of different ways to qualify an employee. So as long as your employee meets any one of those criteria, you now qualify for that credit as an employer. And if you are a flow-through entity, meaning if you are, you have the different entities are your sole proprietorship, it would flow down to you individually. If you're a flow-through entity like an S corporation or an LLC or partnership, those credits would flow down to you individually to offset your enterprise zone income, so your K-1 or W-2 if you receive that from the business. And you also have C corporations. C corporations, it stays at the C corporate level and offsets the income taxes at that level. So you have hiring credits. Those hiring credits for those employees, you can take over a 5-year period per qualified employee. You can get about $37,000 of tax credits. With some limitations, up to 5 years. So within that 5 years, and the first year you're talking about 12 to 14,000 of credits if they worked a full year, making, let's say, on average $12 an hour. So there's some limitations in that depending on the rate. We're limited to 150% of the minimum wage for that year, but the credits are very lucrative.
When we come back, we're going to take a break. When we come back, we're going to have more of Armando Jamjian and some really good, hard-hitting information. This is good. This is really good. I love it. You're listening to your hometown station, AM 1220 KHTS.